He and his wife were married. He was in our industry and had some of the similar philosophies. So when they were married but had no children yet, he owned his human life value in life insurance, which in your 20s, the most an insurance company will issue on you is about 30 times your income. Now, we know that's more than enough to replace that income based upon 4%, but the insurance companies acknowledge that if you pass away in your 20s, that's a whole lifetime of earnings you're not bringing into your household. So if he's making 175, then he's fairly woefully underinsured because he should have somewhere around 5 million-ish if he was able to get 30 times his income, and his income is about 175. I see Jeff checking my math. Am I on with that?
Yeah, if he was just looking to replace his income using the 4% rule, he would need 4.4 million. But 30 times 175 is 5.25 million. So you were right
in
on
the ballpark. Yeah.
Yeah.
And so he would have to have 5 million to replace that for her. Well, let me go back to my friend. He got the most life insurance coverage you could. Then he and his family went on a cruise and he wasn't feeling well, so he took NyQuil throughout the trip along with margaritas. On his flight home, he didn't know it. He was forming a blood clot in his leg. He woke up that night with his chest feeling like it was going to split apart. Didn't know what was going on. Got to the hospital. They diagnosed deep vein thrombosis. He was having to be on blood thinners. And immediately the insurance companies were like, you can't touch life insurance for like 8 more years, at least. 2 weeks later, his wife said they were pregnant. Now, he would have been uninsurable if he took the plan that most of big box financial retail tells people and says, hey, you don't have any kids right now. She could start over for $500,000 and give her some starter money and help pay down the mortgage or whatever it is, but is wildly insufficient for replacing the capital asset that we are in the marketplace for our family, and we don't know what's coming around the corner. We are all one doctor's note away from not being able to buy life insurance again. I would offer they should get the greatest amount of convertible term life insurance they possibly can, because their incomes are going to go up over time, but their ability to buy life insurance will only decrease because we're all one doctor's note away from never being able to acquire life insurance again. It's not funded. It's funded with money, but it's purchased with your health. And you can't have enough money. If an insurance company doesn't want to insure you, you cannot give them enough to agree. Okay.